Hello there, welcome to this edition of Global Business Africa. Over the next 30 minutes, we'll make a quick run through all the key business stories you need to know about from across the African continent. Cairo, Johannesburg, Lagos and Nairobi are our starting points tonight. We've got you covered. Here's what's coming up. We're looking at the risk of a food shortage in Ebola-hit countries in West Africa. Egypt, on the other hand, has signed a $500 million gas deal with the World Bank. Why is that? And we'll be looking at why millions of African farmers are still quite poor despite years in the sector. The United Nations has warned of a severe food shortage in West African countries currently affected by the Ebola outbreak. Now, while the disease has killed over 2,000 people, restrictions on movement between some of the countries has only made things a lot worse. That in turn has led to food shortages and prices have gone up. CCTV's Nina De Vries has more from Freetown, Sierra Leone.
Aizata Mansari sells snapper and mina fish at this local market every day in Freetown, the country's capital. When the Ebola crisis hit, things got really tough.
Right now, from where this Ebola starts.
Now, since this Ebola started, business has become stiff. I cannot sell my fish. I am having trouble feeding my kids. We need the government to help us.
She says customers are grumbling about the high prices, but she has no choice because she has to buy the fish at a higher price in order to sell it. This man sells bread daily.
For example, we've been buying the local pepper here for 1,000 leonie per cup. Now you go and ask for how much it is, it's 4,000 leonies now.
Customers are also frustrated. Items like green peppers have doubled in price because they come from upcountry. Right now, movement is restricted there because it's believed that people moving about is playing a role in spreading Ebola. However, this means it's harder to get the peppers to Freetown.
For instance, let's say even the local pepper we have here in market. We've been buying a local pepper for just 1,000 leones, 2,000 leones per cup. Now you go to the market and ask how much is it. It is something like 4,000 leones now.
He worries about what will happen to his country. Because of the Ebola crisis, the government recently ordered a 3-day lockdown across Sierra Leone, hoping it will help stop further spread of the disease and to target more suspected cases. That means no one will be allowed outside their homes.
I don't feel fine because some of we don't use for fena. We see that 3 days there. What the government don't achieve for we now, we the poor one them. But our government will do something for we the poor one that we not get.
CCTV tried to contact the Ministry of Trade numerous times to find out how they would deal with the high food prices, but no one was available for comment. Nina De Vries, CCTV, Freetown, Sierra Leone.
South African mining output fell more than expected in July, and that in turn raises doubts over whether the central bank can continue raising rates at its meeting next week, even as the economy essentially grinds to a halt. Statistics South Africa says mining output was down 7.7% year-on-year from a revised 5.4% decline in June. Output was largely affected by a dip in platinum production following a 5-month strike by industry workers earlier this year. Economists had expected a mining output contraction of 6.35%. The data increases concerns about the health of the economy in South Africa, which is still recovering from AMCU's 5-month-long strike and faces several other persistent challenges like unemployment above 25%, low growth levels and a growing current account deficit. The Reserve Bank will have to meet and decide on monetary policy. Although the bank has announced a tightening cycle to stem inflation, poor growth indicators could cause it to at least pause hiking rates until 2015. Let's get you some more details from South Africa. Angelo Coppola is live for us tonight in Johannesburg. Angelo, some fairly dismal mining data coming out today. Year-on-year sales down 12%, production down 7.7% in June. What are the other highlights here?
Well, highlights might be a bit of a strong word there, Raman. There are no surprises that the PGMs, the precious group metals, were the biggest contributor to that production drop that you were talking about just now. Platinum mines are still nowhere near full capacity and we're waiting for them to ramp up there. Gold production was also down partially due to the lack of platinum production, because of course gold is one of the basket of product that are mined in the platinum mines. But I did manage to find one ray of sunshine. Seasonally adjusted mining production increased by 0.4% in July compared to June. This follows a month-on-month change of minus 1.1% in June and a minus 3.2% in May. And we are now waiting with bated breath to see what impact, if any, the platinum mine ramped up production is going to have on output when Stats SA releases their next set of numbers. Raman?
Indeed. Given, however, that global demand for commodities is still fairly weak, Angelo, should we expect a wave of cost cuts across South Africa's mining sector? I mean, firms here have struggled for years now to remain viable.
Well, cost cutting is ongoing in any kind of business. We know that many ills can be hidden when commodity prices are running. We do know that when those prices do come under pressure, then the focus goes inward and it becomes a cost-cutting exercise. And it's how the executive teams on the mines and in many other businesses are measured on that margin. They can't force the commodity prices up, but they can manage the costs down. And they'll do that by either closing shafts, leaving vacant posts empty, and eventually they'll probably start retrenching if things don't happen as they should do, while they wait for that demand to increase and the prices to rise, and hopefully for the next super cycle to arrive. Raman?
Indeed. Finally, Angelo, let's move on to something related to this. Is this persistent fall in mining output and earnings as a whole likely to make the South African Reserve Bank pause in its current rate tightening cycle?
Raman, it's unlikely, because the governor, that's Governor Jill Marcus of the Reserve Bank, has other issues that she's worried about and that she has to take into consideration when she looks at those repo rate adjustments. She's got to keep a lid on inflation. Then there's the weakening rand and imported inflation. And these are all issues which the SARB can't control. And that's along with those administered prices like fuel, medical and food inflation. So the Minister of Finance is probably more concerned about what's happening in the mining output sector, as is the SARS Commissioner, because they're worrying about, first of all, Forex, and they're also worrying about tax that they can generate from those exports. So, but having said that, we're not sure what the Reserve Bank Governor and her team at the MPC actually consider when they're looking at those repo rates. It could be a whole range of issues. Raman?
Indeed. Thank you for your input. That's CCTV's Angelo Coppola there live for us in Johannesburg tonight. Let's bring you perspectives from a different end of the world. Miriam Bemard is live in London for us tonight. She joins us now from the UK's capital. Miriam, given that its share price had dropped by over 14% when news of the plans to split assets did break, South African investors clearly were not amused by AngloGold Ashanti's plans to split its South African from its non-South African assets. How are investors on your end reacting to this news?
Well, actually, Rama, it's not really a big surprise for investors on this end, especially since AngloGold shares have lost about 60% of their value in the last 2 years, very much outpacing a 30% decline in overall gold prices after bleeding cash this year with losses of about 14 million in Q2. Deep cuts, Rama, haven't been enough. So the industry has very much been plagued by strikes and rising costs, and in gold's case, sharp declines in production after the price of the precious metal dived more than 18% last year, very much exposing a decade of cost inflation in the sector. Now, there are also concerns that restructuring to companies like AngloGold is going to drastically change the landscape of South Africa's mining sector, causing more uncertainties over long-term project development.
Indeed, but does this particular split of assets between South African exposure and hedging that against anything else that you have elsewhere, does this herald a start of a trend with other mining companies following suit? And if it is, what are the benefits of such a split, given that declining commodity prices and South Africa's tough business environment really aren't going to change anytime soon?
Absolutely. AngloGold's demerger proposal actually isn't the first of its kind. You know, if you recall, we saw this with BHP Billiton, the world's largest miner by market capitalization. That announced last month it would bundle assets at an estimated $10 to $15 billion US into an Australian listed company to try and make its structure more straightforward and, you know, if you will, more attractive to bringing in different new groups of investors. Gold Fields and another South African producer announced a similar restructuring back in 2012, very much paving the way for what we've been seeing in the last 2 years, and has only retained one of its mines in South Africa, its South Deep mine, which is still very much under development, while older mines are now under Sibanye Gold. Now, experts say that the trend is very much continuing off the back of many miners feeling the repercussion of a decade of broad-based growth when demand for commodities was soaring, and now very much trying to unlock value for shareholders that have been losing out in the last few years. Very much, they're used to having all the benefits, and now we need to see the shedding of the assets, cutting debt, and of course all the extra costs.
Yes, indeed, Miriam. The super cycle demanding its pound of flesh, proverbial or not. We'll have to be there. Thank you very much for that. That's CCTV's Miriam Behmad live in London. Now, Egypt has signed a loan of about $500 million with the World Bank for the provision of natural gas to several Egyptian households. Egyptian Minister of International Cooperation Najla Awani said that the loan will help fund a petroleum ministry plan to connect about 850,000 Egyptians, mostly in the rural parts of the country, to the natural gas supply grid. Egypt will then pay back that loan over 30 years as a 5-year grace period between now and then, however. The country is experiencing its worst energy crisis in decades, mainly due to declining gas production, rising consumption and power subsidies. Foreign energy companies are wary about investing in the country, especially after the government decided to divert gas earmarked for export to the domestic market. Egypt also signed an agreement with the European Union for a €67.6 million grant to fund short-term jobs for unskilled workers who are currently unemployed. Let's make a quick run through the equity markets here for you. Some fairly interesting developments across the board. News coming out in the last couple of hours, however, from Eastern and Southern Africa. Starting in Kenya, Mumia Sugar, the only listed sugar company on the NSE, posting losses before tax of $38.31 million. It's blaming an influx of illegal sugar imports and a shortage of cane for that, and of course lower prices as well. Over in South Africa, Reuters is reporting, citing two unnamed sources actually, saying that Sibanye Gold plans to lay off 2,500 employees. These cuts, it says, are due to be announced later on the 12th of September. We'll keep tabs on that and figure out if they're actually true or not, right here for you on Global Business. When we come back, we'll be looking at the world with no oceans and no food in 40 years. We'll also be featuring some African entrepreneurs whose works were recently featured at the New York catwalks. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact, if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Welcome back. We're just about 15 minutes into the hour. There's plenty more coming up on Global Business. Let's start with environmental matters. Greenpeace's Executive Director and environmental and human rights activist Kumi Naidoo has called on people around the world to take urgent action against climate change. Naidoo's warning that in less than 40 years, the world's oceans will be depleted and in turn food security around the planet will be threatened. The Executive Director of Greenpeace was recently in South Africa. Sumitra Naidoo had a chat with him.
Kumi Naidoo has been at the forefront of environmental and human rights activism for over 30 years. He became the first African to head up the international environmental justice organization, Greenpeace International.
This struggle is fundamentally about ensuring that humanity can coexist in a mutually interdependent way with nature in an economic system that is fair, just and equitable.
Since taking the helm at the organization in 2009, Naidu has been instrumental in exposing various governments and multinational companies for environmental destruction.
Today, our oceans are in risk of collapsing within 4 decades because of the triple whammy of overfishing, dumping of toxics including oil spills, as well as ocean acidification, a problem created because more and more carbon in the air, less and less forest to absorb them, that extra carbon is landing in the sea.
Naidu recently visited South Africa and attended the Durban Sustainable Living Fair. He was encouraged by the number of ordinary people and small businesses getting involved in eco-friendly initiatives.
I think my main message is celebrate the local initiatives, do the best you can, innovate, create, be creative, good place to start, don't stop there.
Over 300 exhibitors attended the fair to showcase new technology, innovation and business solutions for going green.
We are taking something that has about 10% of the carbon emissions of your conventional building materials. So we're looking at something that's greener. We're saving about 8 tons of carbon dioxide equivalents for every 50 square meters we build with, comparing that to a concrete block. But the thermal efficiency is much better as well. So in terms of that 10 times thermal efficiency, with your house being cooler in summer and warmer in winter, that saves on your heating and cooling costs for the duration of the building.
South Africa stands at number 13 in the world CO2 emissions, with our top dog being Asia and Russia, and closely second contender, USA.
Naidu has been outspoken against what he calls the lack of political will to address climate change. But he's called on ordinary citizens to do their bit and not wait for government action.
If humanity continues the way we are, continuing to pollute and burn oil, coal and gas and so on, and we get to a point of irreversible climate change, and the planet is inhabitable by humans, the planet will still be here, we'll be gone. Right? It's not save the planet, it's save the humans, right, that live on the planet.
In recent years, there's been increased awareness and activism by the public in getting involved with green initiatives. As a result, more businesses are entering the space to offer green solutions. It's estimated that up to 300,000 jobs can be created in the green economy by 2020. Sumitra Naidu, CCTV, Durban.
African Fashion Week was just held in New York. Designers got to show off some of the season's hottest designs. Partnering with the United Nations Foundation, industry leaders were also brought in to offer support and guidance to African entrepreneurs who are looking to compete on a global stage. Here's Patrice Howard with more.
Colorful couture from the African continent took center stage as African Fashion Week returned to New York, the city of style, for its 5th straight run. All eyes were on fashion-forward designers from Ghana to Morocco, who showcased their latest looks before a global audience, a rare opportunity to give the world a hint of what's to come from a blossoming African industry.
I'm going to be able to sell the whole idea of Nigerian fashion to a bigger city like New York. So it's big, it's huge, and it's amazing. I'm excited to be here.
But before these entrepreneurs put their models on the runway, they put their heads together at a strategy session at the United Nations Foundation, Africa Fashion Week's newest partner. The industry's best talked tech, marketing, and merchandise, with the goal of getting Africa on the map as a fashion hotspot.
Fashion sometimes is overlooked or underrated. So having the UN partnered with us just, I guess, emphasize the importance of such an industry and how we should look at it as an economic driver and perhaps a deliverance from a lot of unemployment that is on the continent.
This is the first year Africa's fashion display has coincided with New York City's Fashion Week. Many designers are delighted with the chance to charm the industry's best from the front row, but some say the true potential of Africa's growing industry is best seen back home.
One of the things that we ought to strive for is to try to get the big industries or the retail chains to come in to see some of the quality and see some of the emerging designs that are coming out of Africa. And I'm sure they will be very inspired and very intrigued to touch and feel and possibly carry these unique products in their stores.
They say you can never be overdressed or overeducated, and that was the theme of this year's Africa Fashion Week. It's about sharing ideas among the makers. who are pushing Africa's fashion industry into the limelight. African Fashion Week was established to showcase the vibrant colors of the continent. But this move to the main stage here at New York City Fashion Week also puts designers in the international spotlight, which they say is very good for business. Patrice Howard, CCTV, New York.
Quick run through commodity prices here for you. The trends that we have been covering, especially with regard to oil over the last couple of days, are still very much intact. Crude prices down about 0.8%. 97.24, the relevant number there. What we do want to cover, however, is a question of sugar, especially in Kenya. Mumia Sugar's numbers do present an interesting paradox. On one hand, the company says that it had a shortage of cane, but we know that in the first half of the year, according to data from the Sugar Board, output actually went up by 20%. So what exactly is it that Mumia Sugar is doing wrong? We'll keep tabs on those numbers and analyze them in detail for you in the course of the program. Speaking of agriculture, we'll be looking at Africa's proverbial agricultural curse. Why are millions of farmers here still really poor despite years of farming? We'll be answering that question next.
BizAsia. Asia means business.
Welcome back. We've got about 10 more minutes in the program. Here's what's coming up next. Let's move on to a question of agriculture. Over 80%, 8 out of 10 individuals in sub-Saharan Africa, they're dependent on agriculture. The sector has quite a bit of untapped potential. The thing is, the same sector is often the face, if you will, of Africa's poverty. Poor investment in the sector, lack of support for smallholder farmers, those two remain the key deterrents to lifting a majority of Africa's farmers out of poverty as a whole. In Grassroots tonight, CCTV's Jen Keo looks at what is being done and what should be done to lift the sector.
Nancy Njeri Mwangi walks through her coffee farm. This is her newest crop. Located in Kenya's Central Highlands, her farm produces one of Kenya's main cash crops, yet earns barely enough for her family of 7 children.
The money I earn is never really enough, but you see, I have no other sources of income since I am a single mother and I have to pay fees for my children.
On big estates, one tree can produce 10 to 15 kilograms of coffee berries a year using fertilizers and other chemicals. But these are too costly for Njeri and other small-scale farmers. Their trees on their small plots produce just 3 to 5 kilograms. This means that with a little help, Njeri's earnings of $300 to $500 a year could be doubled. It's a story repeated across Africa, where export crops like coffee, tea, cotton and cocoa are often produced by smallholders whose incomes cannot support families and pay for products to improve harvests.
When you're talking about lifting the rural farmers out of poverty, you also have to start thinking about the kind of goods, the kinds of crops that they produce. Are they crops that command high prices, what we call high-value crops? You see, there has to be a institution whereby we promote the cultivation of high-value crops on the part of the farmers. These are some of the things that will lift them out of poverty.
Investing more could yield significant returns. In Kenya, farming accounts for nearly a quarter of the national output, a common figure across the continent. Agriculture is also a huge employer of Africa's roughly 1 billion people. Supporting farms, which are mostly small, helps many people.
We are totally disadvantaged in the sense that we don't take our own coffee, and therefore we depend on the international market. We depend on the buyers from out there. And therefore, the moment the price is deep, then we will be bound to suffer the same. We will see our prices also going down.
But for many authorities, it's also a question of cost. In Kenya's Kirinyaga County, Governor Joseph Ndathi illustrates the funding challenge. He says only a third of the county's spending resources of $36.8 million for the year were available for development. Most would go to roads, schools and clinics.
People are being educated to do quality coffee farming so that they can be able to use the right fertilizer. They can also be able to use the right insecticides so that we are able, within a small acreage, you can be able to produce 3 times the kilos that people are producing previously.
The best paid farmer in his county earned 70 shillings per kilograms of coffee this year. That is just under $1. With better marketing and farming practices, farmers could earn upwards of 200 shillings or about $2.50. Ndathi says the government is doing what it can to improve the lives of local farmers. But clearly, farmers like Nancy seem a long way off from earning a living that helps them break out of poverty. Jean Keo, CCTV.
Right then, quick run through the currencies here for you. Just before we wrap up, the rand, of course, near 7-month lows. It actually did go as low as 10.9965 at some point today. Remember, of course, in yesterday's trading session, 11 rands to the dollar was actually briefly breached. It did pull back after that, and that off the back of all this negative data that we are seeing coming out of South Africa. Did cover that in detail earlier on in the bulletin. Now let's move on to what we are working on for you tomorrow. We'll be picking the brains of some chief executives on the continent's business environment, and we'll also be looking at the conclusions from the World Economic Forum for the new champions. The session, of course, does end in Tianjin on Friday. We'll have the latest from there right here on Global Business. That's it for this edition of the program. However, send your feedback to Global Business Africa at cctv.com. Check us out online as well, Facebook, Twitter, you name it, we're there. And we'll see you in the next 23 hours where we get to do this all over again. Thank you for watching. I'm Rama.